Is the recent crypto dip just noise? While you were watching the charts, Wall Street and even entire governments were quietly buying up Bitcoin and Ethereum. BlackRock CEO Larry Fink is calling Bitcoin unrivaled. A Michigan pension fund just tripled its BTC holdings, and Indonesia is considering adding crypto to its national reserves. On top of that, a potential Trump administration is stacked with crypto insiders who are shaping policies that directly favor the market. We're also seeing big money rotate from Bitcoin into Ethereum, with some calling for a run to an incredible $15,000. So, was this a shakeout before the next major leg up? In the latest video from Altcoin Daily, the host breaks down the recent Bitcoin price dip, framing it as a normal 12% correction within a larger bull market. He points out that none of the 30 respected market cycle top indicators are signaling that it's time to sell. The video suggests that even a more severe 31% drop, which would put Bitcoin in the high $80,000 range, would likely be met with strong buying from large investors. Two major upcoming events are presented as positive signs for the market: the Clarity Act, a market structure bill expected in October, and a statement from former White House crypto director Bo Hines, who expressed confidence that the U.S. will purchase more Bitcoin in 2025. The summary also features a clip of BlackRock's CEO Larry Fink, who calls Bitcoin unrivaled and describes it as digital gold, a safe haven for people concerned about the debasement of their national currencies. It's noted that institutional buying is strong, with over 4,300 Bitcoin being acquired by publicly traded companies in a week, surpassing the 3,150 new Bitcoin mined in the same time frame. The discussion also touches on altcoins, mentioning that the Department of Commerce plans to start issuing statistics on the blockchain and that the SEC has delayed its decision on the Grayscale Cardano ADA ETF until October 26th. The video's optimistic take on the market dip and future legislative clarity is interesting when viewed against current conditions. At present, Bitcoin is trading around $111,116, which shows a significant recovery from the kind of dip discussed, lending weight to the normal correction theory. The host's emphasis on the Clarity Act as a positive catalyst is timely. Recent reports confirm the bill has passed the House and is awaiting Senate consideration, aiming to clarify the roles of the SEC and CFTC, which could indeed bring more stability and confidence to the market. The idea of the U.S. government buying Bitcoin, which seemed like a bold prediction, is now a formal policy discussion. A March 2025 executive order established a strategic Bitcoin reserve, shifting government policy from auctioning seized Bitcoin to holding it. This fundamentally alters the supply dynamics and aligns with the video's bullish sentiment. For Cardano, the host's hypothetical trade entry around 83 cents is quite close to its current price of about 86 cents. The mentioned SEC delay for the Grayscale Cardano ETF to October 26th has been confirmed, and this regulatory uncertainty continues to be a key factor influencing its price. In the latest video from Crypto Rover, the host explains his successful prediction that Bitcoin would drop to around $109,000 to grab liquidity before bouncing. He shares that his $10 million Bitcoin long position is now up about $100,000. The next major move he anticipates is for Bitcoin to target the liquidity sitting above the market, specifically around the $120,000 level. A key factor in this prediction is a CME gap at $117,000, which he believes will be filled soon. His strategy is to take some profits by closing 25% of his position when this gap fills and another 25% near the $122,000 resistance. The ultimate target for this bull run, in his view, is $137,000. He also touches on Ethereum, noting strong ETF inflows and predicting it will continue to perform well, with over $6 billion in liquidations providing fuel for a move higher. Finally, he suggests that the next phase of the cycle will see altcoins, which are currently lagging, outperform Ethereum. He specifically points out a promising setup for Chainlink, suggesting it could run to $36 or even $50 in the coming month. The analysis presented in the video aligns with some current market technicals, particularly the focus on the Bitcoin CME gap, which sits between roughly $113,800 and $117,000. As of right now, Bitcoin is trading around $111,116, while Ethereum is at about $4,592. The prediction of a move up to fill that gap seems plausible, as these gaps historically have a high probability of being filled. However, the video's bullishness, based on negative funding rates, needs a current check. Recent data shows that Bitcoin funding rates are actually slightly positive, suggesting a more neutral to slightly bullish sentiment among traders rather than the heavily short position market described. The overall crypto market sentiment is also neutral, with the Fear and Greed Index sitting at 48. In the latest video from Lark Davis's channel, he talks about the recent dip in the crypto market, particularly Bitcoin's price drop. He points to a couple of large, early Bitcoin investors, often called OG whales, who have been selling off significant amounts of their Bitcoin holdings. One of these investors reportedly sold 24,000 Bitcoin, which put pressure on the market. Interestingly, it seems some of this money is moving into Ethereum, as these large holders are buying it up. The video also touches on the positive outlook for Ethereum, mentioning that Wall Street is showing a lot of interest. There are predictions of Ethereum reaching between $10,000 and $12,000 by the end of the year. Solana also gets a mention, with news of companies planning to buy billions of dollars worth of its token. The video suggests that any price dips for Ethereum are likely to be temporary, given the strong buying interest from large investors. A major highlight is the announcement that Trump Media Group is launching a massive $6.42 billion strategy focused on Crypto.com CRO token, which caused a significant price jump for CRO. The video's discussion around large Bitcoin holders diversifying into Ethereum aligns with a broader market narrative of capital rotation. While Bitcoin has seen a price correction, recently trading below $110,000, Ethereum has shown relative strength. Current market data shows Ethereum hovering around the $4,500 to $4,600 level, with some analysts remaining bullish and targeting the $5,000 mark despite recent volatility. The significant institutional interest in both Ethereum and Solana is a key factor to watch. Pantera Capital's plan to raise $1.25 billion for a Solana-focused fund alongside other firms underscores the growing confidence in these platforms. Solana's price has been trying to break through resistance around the $205 to $215 level. The news about Trump Media Group's $6.4 billion CRO strategy is a powerful example of how developments outside of typical market forces can dramatically impact the token's value. Following the announcement, CRO's price saw a substantial increase, hitting levels not seen since May 2022, with its market capitalization rising significantly. This move to create the largest publicly traded CRO treasury company could bring a lot of attention to the token. However, the crypto market remains sensitive to macroeconomic factors and overall investor sentiment, which has been leaning towards neutral after a period of greed. In the latest video from Ben Cowan, he takes a look at XRP, mainly through the lens of its risk metric and its valuation against Bitcoin. He notes that XRP often bleeds back to Bitcoin over time. A key positive signal he saw this cycle was a double bottom on the XRP Bitcoin chart, which historically suggests a good rally is coming. Currently, XRP's value against Bitcoin is at the same level it was back in August 2021. Ben Cowan's analysis presents a structured, data-driven perspective on XRP's potential cycle top, which is a useful counterpoint to the often emotional market narrative. His focus on the XRP/Bitcoin pairing and a proprietary risk metric offers a logical framework for risk management. His prediction of a September pullback followed by a Q4 rally aligns with historical crypto cycle patterns where autumn can be volatile before a year-end push. In the latest video from Coin Bureau, Guy explains how Donald Trump's administration is filled with individuals who have significant personal investments in cryptocurrency. The video details the crypto holdings of key figures like David Sachs, Trump's AI, and crypto czar Howard Lutnick, the Commerce Secretary with deep ties to Tether, Todd Blanche, the Deputy Attorney General who has altered the DOJ's stance on crypto enforcement, Paul Atkins, the new SEC Chairman who has declared most cryptos are not securities, Scott Bessent, the Treasury Secretary pushing for stablecoin adoption, and Vice President. The video argues that these officials are shaping policies that directly benefit their own financial interests and the broader crypto market. It points to specific actions like Executive Order 14178, the Genius Act for stablecoins, and the termination of Operation Choke, 2.0 as evidence of a coordinated effort to create a crypto-friendly regulatory environment. The summary also touches on the potential for a golden age of regulatory arbitrage, where understanding the financial interests of policymakers could be a valuable tool for investors. The video's narrative of a full-spectrum capture of financial policy by crypto stakeholders aligns with several observable market and regulatory trends. Currently, Bitcoin is trading around $111,000 and Ethereum is near $4,500, reflecting a bullish sentiment that is at least partially fueled by increasing regulatory clarity in the U.S. The passage of the Genius Act in July 2025 has provided a federal framework for stablecoins, a move that was swiftly followed by an executive order in August 2025 that prohibits the Federal Reserve from issuing a retail CBDC. This series of events does seem to create a favorable environment for privately issued stablecoins, which the video links to the interests of figures like Howard Lutnick and Scott Bessent. In the latest video from Crypto's Russ, the host explains that the recent market dip wasn't caused by any scary macro news, but was likely just market makers shaking things out. He points out that institutional inflows for both Bitcoin and Ethereum were actually sky high, showing that Wall Street was buying. The market saw a strong recovery, with altcoins like Solana and XRP bouncing back. CRO had a particularly big day, jumping about 30% after an announcement about a partnership with Trump Media to create a CRO treasury. The next major event on the radar is NVIDIA's earnings report, which is expected to be positive and could give another lift to risk on assets like crypto. The video then turns to some impressive statistics about Ethereum. ETH has apparently broken an 8-year downtrend against Bitcoin and reached a $500 billion market cap faster than Apple or even Bitcoin itself. With this momentum, he speculates that ETH could potentially reach $12,000 to $15,000 by the end of this cycle. He also gives a shout out to Solana, noting its fantastic fundamentals like transaction volume and new wallet creation. He believes that once meme coins get hot again, Solana is set to fly. The video's take on the market recovery and Ethereum's strength lines up with some of the current sentiment, though the market remains mixed. The crypto fear and greed index is hovering in the neutral zone, suggesting that while the panic has subsided, widespread greed hasn't taken over just yet. The speaker's bullishness on Ethereum is echoed by some analysts who see it potentially reaching $10,000 or more, while others are more cautious, pointing to significant selling pressure that could push the price down to around $4,000. His prediction of a $12,000 to $15,000 ETH seems optimistic but is within the realm of some high-end forecasts for this cycle. The mention of Solana's strong fundamentals is well supported. Recent data shows its daily transaction volume is vastly outpacing competitors, a testament to its network's capacity. However, on-chain activity has shown some mixed signals recently, with a drop in network fees and transactions even as capital inflows remain strong. The CRO pump was a major event, with the token jumping around 40% after the Trump Media Treasury news, confirming the video's report. The market's attention is now squarely on the upcoming NVIDIA earnings, which are indeed scheduled for after the market closes today, August 27th. Analysts are expecting strong results, and a positive report could validate the idea that the tech sector's strength will continue to benefit crypto. In the latest video from Crypto Wendy, she talks about the recent delay of the Bitwise XRP spot ETF to October 24th. Instead of seeing this as a negative, she points out that there are about 80 different crypto spot ETFs in line for approval. Many analysts think these will get the green light in the fourth quarter of 2025, which could bring an estimated $640 billion into the crypto markets. The video's focus on Ethereum's growing strength relative to Bitcoin is timely. Recent data confirms a significant trend of capital moving into Ethereum ETFs, which have seen daily inflows of over $455 million, consistently outpacing Bitcoin ETFs. As of today, Ethereum is trading around $4,570, showing resilience and a 3.37% gain, while Bitcoin has been struggling to stay above $110,000. This rotation is not just a fleeting event. It's supported by large-scale institutional moves like Tom Lee's BitMine, accumulating over 1.71 million ETH. In the latest video from The Modern Investor, the conversation centers on the steady and increasing adoption of Bitcoin by large institutions and even governments. A major point is the state of Michigan's retirement system, which has tripled its Bitcoin exposure by holding 300,000 shares of the ARK21 shares Bitcoin ETF, valued at $11.4 million. The video notes this isn't a new trend, reminding viewers that wealthy investors and institutions have been quietly acquiring Bitcoin since at least 2014. Another significant development discussed is the Japanese investment firm Metaplanet. They've continued their aggressive buying streak, acquiring another 518 Bitcoin for $61 million. This brings their total holdings to 18,113 Bitcoin. Their stated goal is to own 1% of Bitcoin's total supply, which amounts to 210,000 Bitcoin by the end of 2027. The host questions the feasibility of multiple companies achieving such ambitious targets given Bitcoin's limited supply. Finally, the video touches on potential sovereign adoption, with Indonesia's vice president's office inviting Bitcoin advocates to discuss the possibility of adding crypto to the nation's $153 billion in foreign reserves. This is seen as part of a larger global trend where countries are looking to diversify away from the US dollar and see Bitcoin as a viable alternative. The video accurately captures a significant, ongoing trend of institutional and even sovereign interest in Bitcoin that continues to gain momentum. The examples of the Michigan Pension Fund and Metaplanet are not isolated incidents. Just recently, the California State Teachers Retirement System, the nation's third-largest pension fund, disclosed an indirect investment in Bitcoin via its holdings in Strategy, Inc., formerly MicroStrategy. This shows a growing comfort level among traditionally conservative funds to gain exposure to the asset class. Metaplanet's strategy is particularly noteworthy. Today, the company announced plans to raise an additional $880 million specifically to purchase more Bitcoin, signaling their deep conviction. Meanwhile, the discussions in Indonesia are part of a broader global conversation as many nations quietly explore digital assets for their reserves. While these institutional moves create a steady demand floor, the market remains dynamic. Bitcoin is currently trading around the $111,000 mark, showing relative stability despite large-scale corporate plays. This divergence between the patient, large-scale accumulation by institutions and the more sentiment-driven retail market is becoming increasingly apparent.